For inventory valuation, we have to take into consideration two things. One is market value, market price. Another one is cost price. Fine. As per accounting standard 2, we have to take the lower of the market value, market price, and cost price, which was lower. Fine. But market price is not merely market price; it is NRV. So we can if we want to tell, it is nothing but NRV and CP, whichever is lower, whichever is lower. Fine. So what is called NRV? Your market price is there, that is sales price is there, your sales price is there. Then you have to deduct some type of expenses associated with that sales. Fine. So expenses associated or inevitable expenses without which that goods cannot be realized should be deducted. Expenses associated with sale should be deducted. Fine. It is called NRV. Fine. We can take a sum. Mr. X is a retailer. Mr. X is a retailer. Read it out again. Then
during the accounting year ending 31/3/2003, he purchased 500 units at the rate rupees 350 units.
He purchased 500 units. Fine. 500 units at the rate of
350 each.
350. Fine. Then
and sold 450 units.
Fine. Sold 450. Sold how many?
450.
So out of 500, he has sold 450. Your stock is only 50 units. Fine. Then
at the rate 550.
At the rate of 550, each. It is market price. It is my market price. Then
through his agent
who engaged who charged a commission of 10% on sales.
10% on sales.
So selling commission
of 10% on sales.
Is 10% on sales. Fine. And then
X also paid rupees 8,000 as expenses, but towards the end of this year, the market price fell down to rupees 250 per unit.
He has paid another 8,000 rupees. Fine. He has paid another 8,000 rupees. Fine. 8,000. But it is not likely to be associated with the sales. He had made so many expenses. He may make many expenses. So it is irrelevant. इसका कोई लेना देना नहीं है. उसके बाद क्या हुआ?
But towards the end of his year, the market price fell down.
Yes.
Rupees 250 per
unit. That market price was 550. Right.
Fell down
and now new market price. Here is how it is now market price. Now market price comes down to 250 rupees. Right. This is the sum. You have to calculate the valuation of the stock. So your stock is how many stocks are there? We have purchased 500 units. 450 is sold out, so you have 50 units unsold stock. Fine. Okay. So you have to calculate two things. One is NRV of 50 units. Fine. Your current market price is 250. Bracket 250 minus selling commission 10%. Minus selling commission 10% of 250. Fine. So 50 into that, it comes to rupees 11250. Pakka. It comes to rupees 11250. So you get one NRV is that. This is nothing but your NRV. Fine. And another thing is there. Your cost price was it was purchased at the rate of 350. Your cost price is 350 into 50. So your cost price comes to rupees 17,500. Fine. Whichever is lower? Lower of the above is rupees 11,250 is the stock of valuation. Is the valuation of the stock. Is the
Valuation of the stock.
Valuation of the stock. Fine. This is sum number 1 of that book. Okay. So selling price or market price is not purely correct. Originally it is NRV, net realizable value, or cost price, whichever is lower. We can take another sum. Suppose a businessman has an item of stock of whose cost is another sum number 2 is that cost is rupees 15,000 rupees worth of stock. Fine. It can be sold. It can be sold at rupees 17,000 subject to some expenses. Okay. If provided if it কি লিখেছে বলো? It is modified at a cost of 850.
Cost of 850.
Provided it if modified at a cost of
rupees 850.
Rupees 850.
Before
Fine.
sale.
Before sale. Before sale. तो सेल के पहले तुमको क्या करना पड़ेगा? फिर 850 रुपीज अगर खर्च नहीं करेगा तो 70,000 में सेल नहीं होगा. उसके बाद क्या हुआ?
Selling expenses.
Another selling expenses. सेल्समैन को कमीशन ऐसा कुछ देना पड़ेगा और एडवर्टाइजमेंट देना पड़ेगा. तो सेलिंग एक्सपेंसेस आ गया रुपीज 1,800 है ऐसा. तो देन द स्टॉक वैल्यूएशन ऑफ द स्टॉक कितना होगा? पक्का. सो कॉस्ट ऑफ द स्टॉक वाज, so your CP is there and NRV is there, so you calculate that NRV is that your selling price is 17,000 minus you have to expense exclusively for that sale is 850 because of the without modification it cannot be sold out, and minus 1,800 selling cost करके तुम्हारा पास आ गया 14,350. Your CP कितना? CP is 15,000 rupees. Lower कितना होगा? Lower is 14,350. It is the stock valuation. Simple. Is there any question? Sum is over. Fine. Sometimes the cost is not given to you. Suppose this is a manufacturing concern, cost is not told, but the direct material, direct labor, direct expenses, indirect expenses, indirect overhead, these are the things given to you, and you have to calculate the cost first, and then find the market price or NRV, and lower of that two will be the valuation. This is the sum number 3. Fine. The sum tells you that normal capacity of that company is, of that production method is 20,000 units. This is the question. Fine. 20,000 units is the capacity. Then fixed overhead is 40,000 units. Fine. I can tell you that fixed overhead per unit कितना आ गया? Fixed overhead per unit is 40,000 divide 20,000 at the rate of 2 rupees. এটা আমি বার করে রাখলাম কোশ্চেনের মধ্যে. इसके बाद क्या आया? Direct material at the rate of
rupees
80. Then direct labor at the rate of rupees 40. তাড়াতাড়ি করে বল, সময় নষ্ট হয়ে যাচ্ছে. Variable overhead at the rate of
₹8 per
rupees
unit.
8. इसके बाद
Actual
production.
production
Your actual production is
8,000 units.
actual production is 18,000 rupees, 18,000 units. Sold were 15,000. Simply your unsold. How much amount is unsold? 300. 3,000. Your production was this is my workings. 3,000 is the unsold. Selling price is selling price is 220. Fine. So you have to calculate the cost first. How much will be the cost? So you have to make a cost sheet first. In the cost sheet we can see that. So it is the calculation of cost price. Fine. Your direct material was 80 rupees. Direct labor 40 তাড়াতাড়ি বলবি।
Fixed overhead
নেই। Variable overhead 8 rupees. 8 rupees. It is given there. And your fixed overhead has been calculated as per accounting standard AS2. It is to be calculated on the basis of the capacity level. Okay, production capacity level. It is 2 rupees. Then it is your total cost comes to rupees 130. Fine. So this is my cost price. Then market price. Find out market price. Your market price was 220. Fine. No commission, nothing, expenses, nothing. So that market price comes to my NRV. That market price is nothing but your net realizable value. Fine. So the cost, it is 220. It is 130. Valuation comes to valuation of stock is your stock unit unsold stock was 3,000. You have produced 18,000. You have sold 15,000. So you have 3,000 units of unsold unit into at the rate of 130, 39. This is the valuation of the stock. This is our sum number 3. Fine. Another sum is there, that is called stock reconciliation. Stock reconciliation is nothing but there is a time gap between the stock taking period and the valuation date. So our valuation date is nothing but 31st 3, suppose 2024 is the valuation date. Fine. And suppose stock taking was made on 7th 4 2024. In between these two there may have some transactions. So 7/4/2004, on 7/4/2004 there is a valuation taken by the stock taker, that is that very officer who used to visit on the last on 7th April and got a valuation of suppose 1 lakh rupees. Fine. In the meantime there some goods have been delivered, so you have to that delivered goods, you have to add some delivered goods. Suppose it is 20,000 rupees. Fine. And meantime some goods have been received in the godown. Some goods have been received in the godown and that is not there on 31st March. So it is to be deducted. Suppose received goods is 10,000 rupees. It is to be deducted. Now the valuation comes to 1,10,000 as on the date of valuation. This is called reconciliation. Valuation as on 31st 3 2024. Fine. We have to take a sum on the reconciliation, on the stock reconciliation also. So we shall take a particular format by taking some numerical examples. It is there. First, value of the क्या लिखा बोल
Value of stock
value of stock
on the date of stock taking.
on the date of stock taking. On the date of
Stock taking.
I have already explained the matter. Fine. Suppose it is 1 lakh. Fine. It is
1 lakh.
1 lakh. Then you have to add something. The first addition is there.
Sales.
Sales at cost
And purchase return between balance sheet date and
stock
taking
taking
date.
date. पक्का? ताले sales at cost. Suppose sales was sales during that period only. Sales during stock taking date. The date of stock taking, suppose I have told you that it is nothing but 7/4/2024. So sales delivered between 31/3/2024 to 7/4/2024. Fine. It is to be converted to cost, but sales will not be given at cost. Suppose there is a sale of rupees during these periods. There is a sale of rupees 40,000 rupees. Fine. 40,000 is not cost. You have to convert it to cost. Suppose 20% profit is there, so cost should be 80%. Fine. So you have to convert it at cost. Take care, not at the selling price. Sales at cost. Sales at cost of goods sold. So sales minus GP करना पड़ेगा. क्या करना पड़ेगा?
GP.
Sales minus gross profit.
Gross profit.
So you have to calculate it. Suppose it is 32,000. This is 32,000 goods have been sold out and have been delivered from the godown. Stock with customer.
On sales or return.
Stock with customer. तो क्यों कस्टमर के पास अभी गुड्स स्टॉक है ये देखना पड़ेगा पड़ रहा है देखना पड़ेगा क्योंकि इट इज फॉर सेल और रिटर्न that is the goods are sold out to the public, to the customer, on the condition that if it is not accepted by the customer, it may be returned to the seller. But the goods have not yet been confirmed, neither confirmed nor accepted, neither accepted, not rejected, not returned. So now the goods are nothing. Goods are lying in the hand of the customer only. So it is to be added. Fine. Suppose it is also to be taken at cost. Fine. Suppose it is 10,000 rupees, 8,000 rupees. Pakka. Then some amounts are lying at the godown of the consignee. So stock with consignee. Stock with consignee. Some amount of goods is lying in the godown of the consignee. It is also the cost. Fine. At cost. Suppose it is 10,000 rupees. Fine. You have branch business. You have branch business. The branch stock is also there. Branch stock. Some stocks are lying in your branches. Suppose you have 20 branches all over India. In the branches there are some amount of stock. It is also at cost. Fine. Suppose it is another 10,000 rupees. So the 10, 20 and 40. It is 60,000 rupees to be added. It comes to 1,60,000. It comes to 1,60,000 less.
Purchase and sales return.
Oh, another thing is there. Purchase returns must be there. Here purchase return. Purchase return is also there. Suppose purchase return was nothing, nil. Okay. Then another here it is purchase. Here it is purchase and sales and purchase return करके कुल मिला के it is 32,000 is there. Okay. Either purchase
and sales return
Purchase and
written in
sales.
balance sheet.
and sales return. So purchase received कब से कब, that is also in between 31/3/2024 to 7/4/2024. Okay, so that very purchase is suppose 30,000 rupees. पक्का? It is कितना?
30.
And sales return it is at cost also. You have to convert it to cost. Suppose 5,000 rupees. Fine. Another theme is there. Stock of goods received or sales or return as or sale or return as consignee. Another thing is there. Stock of goods received. ये कहाँ से मिला? लगता है कि कोई सेल और रिटर्न में भेजा था पहले, अभी रिटर्न आ गया, और कोई कंसाइनी को दिया, कंसाइनी रिटर्न कर दिया, तो गुड्स जो कंसाइनी को पहले भेजा था, लगता है कि वो रिसीव फ्रॉम कंसाइनी, और सेल और रिटर्न कंडीशन में था और अभी रिटर्न आ गया. किसको ऐसा कोई गुड्स ड्यूरिंग दैट पीरियड, इफ इट इज रिसीव्ड, you have to take into consideration it is another 5,000 rupees. So here it is 40,000 rupees minus, and it is your valuation, reconciled valuation as on the date of 31st March, it comes to rupees 1,20,000. Fine. It is valuation
Value of inventory
as on 31st/3/2024. Fine. The matter is over right now. So this is the sum of stock valuation as reconciled from the later date to the earlier date. Okay, this is over for the day. Bye.